Dewang Sanghavi. I work as a senior research analyst at Abakkus, tracking metals and mining sector. Now I will give a brief overview of the metal sector. Metal sector can be broadly classified into ferrous as well as non-ferrous sector. Steel companies form part of the ferrous sector, while base metals such as copper, aluminum, zinc and lead form part of the non-ferrous sector. The ferrous sector can be further subdivided into long steel products as well as flat steel products. The long steel products finds application in construction sector, while flat steel products find application in automobile as well as white goods sector. Metals being a core sector, it is closely linked with the GDP growth rate. The fortunes of the metal sector is dependent on the India's growth story. Over the medium to long term horizon, India is well set to grow at a healthy rate and transform from a developing nation to a developed nation. Domestic steel companies are well placed to cater to the rising demand. On the global context, China is the world's largest consumer of metals and has a significant impact in the global demand-supply dynamics. Over the last few years, India has been a bright spot in the global steel sector. The same trend continued in FY25, where India's steel demand grew at a healthy 11.5% to reach 152 million tons, as compared to a flattish trend in the global steel growth. This has augured well for the domestic steel players. However, in FY25, while the demand was strong, on account of elevated level of Chinese steel exports, there was a pressure on domestic steel pricing, which put a pressure on domestic steel companies. Things are looking very promising for the metal sector for FY26. The government, in order to support the domestic steel sector, levied a provisional 12% safeguard duty for a period of 200 days and will review this duty after a period of 200 days. This augurs well for the domestic steel players as it will support the domestic steel pricing. Also, the prices of key raw materials such as coking coal are muted, which will support the operating margins of the steel companies. On the non-ferrous side, the base metal prices have seen an uptick on the LME, which will augur well for the non-ferrous players. Also, we expect a good demand growth in FY26 because of healthy demand scenario, and that will lead to healthy sales volume for domestic steel companies, thereby leading to a positive operating leverage flowing into the numbers. As metal companies are capital intensive, they have debt on the balance sheet and hence valued on a EV by EBITDA basis. Also, since it is a global sector, their valuations are compared with the global peers. The global players are trading at 6x forward, 1 year forward EV by EBITDA, and the domestic companies are trading at 6.5x 1 year forward EV by EBITDA. The premium is well justified because Indian companies have a healthy demand growth, support from the government in terms of safeguard duty, and a lean cost structure as compared to global peers. In fact, there is a headroom to increase this premium going forward because of the above mentioned factors. In the near term, the key risk remains the Trump-related tariffs, but however, the recent correction in dollar index augurs well for the metal sector. There is an inverse correlation between dollar and commodities, and that is positive for metal sector. Overall, India is one of the largest and the fastest growing economy in the world, and that is reflected in the metal sector outlook.
All investments are subject to market risks. Please read all scheme-related documents carefully before investing. Performance and references to returns are indicative and does not guarantee any returns. Investor discretion is advised. This video is neither a general offer nor solicitation to avail the service of investment from the CB-registered intermediary under the services offered by Abakkus, nor is it an offer to sell or a generally solicit an offer to become an investor in the services offered by the Abakkus. The delivery of this video at any time does not imply that information herein is correct as of any time subsequent to its date. The contents of this video are provisional and may be subject to change.